Talking about markets and how to prepare for the trade for tomorrow after the GDP data is out late evening today. And Prakash Diwan was giving us his views on that. So Prakash, tell us, how will the markets really react to these numbers and how should one prepare?
So that's quite important, Nisha, because given the fact that this is a disappointment from the general expectation, the market would see it negatively, and it could kind of slow down the kind of enthusiasm that's building up on the back of positive numbers coming through from some of the large cap companies and particularly the economy-facing sectors. So, results have given a picture that there could be changes which are favorable, whereas the GDP number tells you that maybe things aren't as normal or as great as earnings have given you an indication. So there could be that this dichotomy which will be a bit disappointing. Markets could open weak. But as I was saying earlier, you have to take these numbers with some rationale of the base effect or the fact that credit growth on the industrial side has really not picked up yet. So it could be slightly early to factor in improvement post the demonetization impact, and we could only have it wither off in the next few quarters, and this could probably be the most badly hit quarter of sorts. So going forward, the disappointment might not be as strong. But yes, tomorrow morning, the start of the day could be weak, certainly because of these numbers.
That's right, Prakash. But considering that most of the analysts have also said that this was just a one-off in Q4, there was a slowdown in terms of GDP growth. But overall, the projection for the next year remains pretty much on the level 7.2, 7.4% for the current financial year. So given that, is it a good buying opportunity if markets are in negative territory because the long-term projection really remains intact?
Absolutely, absolutely. So this would be, these are dips that are fundamentally triggered, and people should buy into this because the interpretation of change in back-ended fundamentals is a very good opportunity because you are buying into the market for the future growth. And as long as we remain in this band of 7.2 to 7.4, which is way higher than what, let's say, China at 6.4, 6.5 is projected to be for the next 12 months, it's definitely a relative superiority of a market that is established amongst the Asian economies and emerging markets. So I think there will be money coming in. Investors, domestic or international, will definitely find it to be a great opportunity, and particularly to buy the sectors that we keep on talking about, whether it's NBFCs, infrastructure, cap goods, fertilizers, agri, which are going to take the lead in terms of this revival. So yes, opportunity to buy tomorrow morning. Wait for maybe the first half an hour for the markets to discover a equilibrium of sorts, and then just go ahead and buy.
And Prakash, would you also like to share what will be on your radar if it really comes off the highs, then you will pick it?
So, okay, so that's always a constant list that you keep on looking at. But I think, the capital goods segment is looking extremely promising, the likes of L&T, given the fact that numbers from M&M and, Tata Motors and all have been good. So consumer discretionary, the likes of and Hindalco, which has given great numbers, and, triggers which are very strong domestically, and then very visible enough. So, we've decided to add on to some of these larger, safer names with a very strong risk-reward, position as of now to kind of buy into it any dips, in this volatility that we are seeing in the last few days.
All right, Prakash, as always, thanks so much for stopping by and giving us your views on markets. So Prakash Diwan's, take on GDP data. So it's definitely disappointing. Markets are expected to open in the red tomorrow, but it could be a good buying opportunity. So buy on dips is what he has to say.